What did you make of the jobs numbers? And by the way, there were other eco numbers as well this week.
David, these are hot numbers. The rate of job creation is twice as great as the growth in the number of adults in an economy that's already overheated. That's not consistent with bringing inflation down to its target level. And you see that in the wage data, which is pointing to inflation way above the Fed's target. We've got a low unemployment rate at 3.6%. And if you look at any of the other labor market indicators that we got this week, the quit rate, the level of vacancies, the layoff rate, the insured unemployment data, all of that, based on past patterns, is suggesting an even tighter unemployment rate than the 3.6%. So I think we've got an economy that is currently very strong, not sustainably strong in terms of the rate of job creation, and not very surprisingly, given that strength, we continue to have inflation and indicators of forward inflation well above target. So I think the market is right to judge that once again, the Fed has underestimated inflation for basically the 8th quarter in a row. They've been surprised on what's happened to inflation. And because they're surprised on what's happening with inflation and the strength of the economy, they're going to be surprised by what they have to do to interest rates. And so I think that you've seen an appropriate adjustment in medium-term interest rates to this reality. My best guess is that you're going to see further adjustment as the data continues to come in. But I think it's a mistake to be distracted by the wiggles. Yes, the ADP number yesterday was super duper strong, and today's number was not nearly as strong as the ADP number. But if you step back to the bigger picture, nobody thinks we can continue indefinitely to create jobs twice as fast as the adult population grows. That means we're having tighter and tighter labor markets, and that means an inflationary picture, and the Fed's going to have to respond to that.
Larry, you were one of the very first, maybe the very first, to identify this risk here on Wall Street, but also in your pieces for the Washington Post. I guess the two questions that occur to anyone is, number one, what's it going to take for the Fed to get really inflation under control? Number one. And number two is, why is it taking so long?
It's taken so long because we started out so late, and given how late we started, we didn't move sufficiently because we believed mistakenly that the neutral interest rate was still very low, and we believed mistakenly that raising interest rates would have large impacts on the economy that were greater than the impacts of interest rates in the current structure. And we haven't really recognized that it's a basic feature of the inflation process that while you get transitory fluctuations, you don't stop an underlying wage inflation without having a significant slowdown in economic activity. And since we haven't yet had a significant slowdown in economic activity, it shouldn't be surprising that we've still got inflation well above target. Nor should anybody take comfort from the fact that the components of inflation that everybody recognized were transitory, the fact that they've come down and in some cases even gone into reverse, is better than if they hadn't, much better than if they hadn't. But nobody ever thought we were an underlying 8% inflation country when we were having 8% inflation. So the fact that the rate has come down shouldn't be confused with saying that we can be confident that we're on a path to this all being okay, and certainly not with saying that we can be confident that we're on a path to this all being okay without the Fed doing more to raise rates. So anything's possible, and all of these judgments, David, are statistical. Maybe we'll get a big productivity boom out of AI very quickly, though I think that's unlikely. Maybe the inflation process will behave very differently than it has in the past. But I think the best guess has to be that the Fed's going to have to raise rates more, that if the Fed wants to see inflation get back to its target, it's going to have to raise rates enough that at some point the economy suffers a downturn. And I've said it many times on your show before, but I don't see anything that changes my mind from the view that soft landings represent the triumph of hope over experience.
Larry, I want to turn to a different subject here that you wrote about in the Washington Post this week, and that is the so-called affirmative action decision coming out of the Supreme Court of the United States. You not only are an esteemed economist, you not only were Secretary of Treasury, you also ran Harvard for some time. You really lay out there how difficult this issue is, that it's a broader issue, it's an important issue, but a broader issue than simply race.
Look, I wish the Supreme Court hadn't acted. I wish it had let the world continue on the path that it was, let private institutions make their choices about how they're going to pursue fairness as they see it. But right now, there's a critical choice that leading universities face. One option is that they can gerrymander the admissions criteria and change just exactly how they do it and encourage people to put certain sentences in their essays and do away with standardized tests that have a lot of information and fight to try to keep the exactly same percentages of racial groups where they are. That's one approach. I think if they do that, they will be increasingly resented by the broad public. They will diminish the intellectual quality of their classes. And in fact, they will have done very little to promote social justice. The alternative path is that they step back and that they recognize that really the important test for them in this era is their overall contribution to opportunity in America. And if that's what they want to maximize, it'll be a very different path. No more legacy admissions. No more special admissions for people who've been coached extensively to be good at aristocratic sports. Deciding to expand their class sizes so that more can benefit from what they bring, and not defining their greatness by just how exclusive they are. Using the power of distance education for their education to be defined by more than what happens in the fall and spring semester on their campus, but training teachers during the summer, training able students with computers, and crucially, turning their energy to strengthening what happens in our public schools across the country.
Right.
Look, David, only about 1.5% of the students who score in the top ranges of the SAT are African American.
Yep.
Until we fix that, no durable solution to these problems. That needs to be a crucial part of the mission of our elite schools.